watching Stock Watch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are David Shapiro from Sasfin Securities and Ricus from PSG Hole in One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. I was actually looking at some of the stocks that were the biggest gainers on the JSE today, and we have the retailers, TFG, Truworths, showing really great gains. The TFG up on the day by more than 6%. Ricus, I want to start off with you. Surely that is the VAT developments where the hike has been scrapped?
I would imagine so. I mean, it was pretty obvious across the sector. I think even Woolies was up for it, for a change. But yeah, lots of positive news on that side. Yeah, and the other groups that performed were banks and telecoms. They still keep on going up, which is quite interesting. And yeah, and a bit of sell down in platinum counters, which is rather strange because platinum price is up, but that is what it is, I suppose.
Okay. I like that you mentioned all these things because there are questions on each of these sectors, the banks, the telecoms, the PGM counters. But I mean, yeah, we had good news coming out from Treasury, but also David, Donald Trump has agreed to meet with Cyril after everything that has happened, after all the insults on social media. And I mean, South Africa, for the most part, keeping a cool head. It seems that it's all worked out. So, yeah, would you say that this is a good thing and that, yeah, it solidified a good path going forward?
Well, you know, with Trump, you're not quite sure what day it is and what mood he's in. I think the good news is that we've seen 3 days of gains in the US, and, you know, this is the third day. And that's a decent sign, which is response, you know, the market's responding to him backtracking, particularly his attack on Powell and also against tariff increases, because I think some of the big retailers have, you know, Walmart, Costco, Home Depot, the CEOs, Kroger, all of those businesses have gone to him and said, you know, you continue like this with China and other areas, then there's nothing on our shelves. So I think why I say that is that he's starting to ease out a bit. His popularity is falling, and therefore he's got to try and reconcile with his enemies. You know, he's insulted everybody from Australia to Europe to the UK to South Africa, etc. But you can't carry on like that, and that's why I think you might start to see a more conciliatory tone coming from Trump, and perhaps that's why the markets are responding the way they are. But yeah, he's taken a lot of punishment. You know, he's not one to admit it. So I think that's hence the I think deal to meet or to talk. So yeah. Let's see whether it takes. And then when it comes out, you never know what the truth is. You know, you never know what they really said.
Exactly.
I think Trump should get. Cyril should get a Zulu interpreter, or he's a Xhosa, so something like. Oh, Petty, where's he? I don't. You know, that gives him the circuit breaker to talk to Trump. You know?
I hear you. I actually hear you.
Because you saw what happened to Zelensky. You know, so in this case, he said, "I don't speak English." You know, and have a Petty.
I hear you, but you know what? As much as it's good news all around, Eskom always has to come ruin the party. And I was actually wondering why the Rand wasn't responding to the good news. And actually, an analyst that I had earlier said that, yeah, it is because stage 2 load shedding is back. So, yeah, it's not going to be a very good long weekend, or maybe good for the restaurant counters, because I think all of us then will be away from home. Let's get into the questions. I did mention that we'd be going into the banks. There's a question on Absa. Your view on Absa: the dividend looks great, but the share price does not. Ricus, that discrepancy, divergence?
Yeah, it's just the attitude towards the company. I think of the for big bonds, its fundamental performance has been the worst. So if you take a look at the sector, first round, Standard Bank, Nedbank, ABSA, those four specifically, they're all cheap. But in this kind of market where they've all gone down quite severely, I'd rather be in quality rather than in something which is just undervalued on some other fundamental basis. You need both sentiment and fundamental value to get a share price going. It's no use sitting for months, years in something that might be undervalued on a fundamental basis, but also sits with negative sentiment. You need fundamental value and sentiment to work in conjunction to get your share price moving. So if that whole sector is cheap, I'd rather stick to quality. Normally it would be first round. I've mentioned this before, but I'm still worried about the outcome of the motor financing business in England, which is subject to a court case and possibly penalties. So I'll go for number 2, which would be Standard Bank, and as an outlier, Capitec, which came up with brilliant results, and I don't expect that kind of result to stop soon.
And they are just firing on. But just talking about sentiment there on ABSA, the viewer says, with the new CEO, can we expect better growth in the future? I like the company's prospects. Make me believe it. David, can this bring in a new era of positive sentiment?
You know what? First of all, he might be a very good manager, and I don't take anything away. He came from Standard Bank with a huge positive reputation. The problem is that ABSA's got the bad reputation, so even a good jockey on a bad horse is not necessarily going to win the race. So the problem with South Africa is that we're in a no-growth zone, and that's a danger. They can bumble along and do well and watch the balance sheet or manage the balance sheet and manage their income statement very carefully. But at the end, you need growth. And if you look at a chart on ABSA, if you look at a chart on most of our banks, you're going back 3-4 years, the banks have done nothing. Although there's a lot of noise around, a lot of noise around the markets. We're at a new high today, and I think, but that comes from the influence of the ABN BEVs and those companies which are offshore, and also the gold counters, local counters are battling. And I don't know, and I leave it open to Ricus as well. I couldn't understand just looking at the market. I said, you've got load shedding, you've got the GNU, you've got, which is, I don't know who's running the country anymore. At least you've got inflation down, but somehow the markets just keep doing okay, against all of this news. So there's obviously something positive there, something positive happening, which maybe we haven't tapped into yet.
All right. Well, I mean, on the other side of the spectrum, as talking about maybe that there's something positive, but still a lot of negatives. Afrimat actually released a disappointing trading statement that was yesterday. And the viewer says, this got me thinking of a below question I sent a month ago. It went, I'm still a holder in Afrimat and hoping to hold for ±5 years. Is Afrimat a good investment case for the period? I mean, Afrimat's always been seen to be a good investment, because of what management has been able to do with the company. But I mean, they did list quite a number of headwinds in yesterday's update, and we did see it getting punishment from investors. Your reading of Afrimat at this point, Ricus?
Okay, price downside in the short term to about 45 Rand, which is a low they had a few months ago. The results itself were terrible, but not really because of anything management. It was just extraneous factors, whether it be unrest in Mozambique or the old Transnet transport thing, the problems with supplying coal to BLD school, whatever they're called. So a lot of factors beyond management's influence, and also their cement business that they bought taking probably a little bit longer to turn around. But coming back to the viewer's question, it's an incredibly well-managed resource company in the end. And you don't hold resources for 5 or 6 or 4 years. You buy resources when they're at the bottom of a cycle, and you sell resources when the resource market is at the top of the cycle. If you want to be in a well-managed company, go look at an industrial company that's well managed that rather than a resource company. So I wouldn't rate this as a buy and hold. But talking about the company itself, I don't know how they were very positive, for
They were.
going forward, that they're going to recover some of these disappointments that they had, which is great, and I fully expect them to do so. But how long it's going to take and how good that recovery is going to look, obviously, I don't know. So I would leave it to the market and the price itself to tell me, oh, there's interest coming back into the company, and I'm also assured that it's very well managed. So if that price starts turning, I'd be very happy to hold it, because I think there is still some positive news surrounding resources in our country. But as David said, it needs a bit of economic growth as well.
Yeah, it's quite interesting because I also saw that they were quite positive on the future, particularly coming return to positive metrics in FY26. And I actually do see that today it's up, 5%, so reversing most of those gains that we saw yesterday, but still at the bottom of the cycle. David?
Oh, exactly that. If you go back a few years ago, maybe 3-4 years ago, before they started their mining expansion, which I don't criticize, or the purchase of Wholesome, they're a good management team, but this was one stock that actually tracked the gains that you saw in Capitec. If you held Capitec and Afrimat, you had outperformed the market by an incredible amount. It was a brilliantly run business, from the time that it listed. But the last few years, I think the economy has just caught up with it. It's just been very difficult, and you're not going to be able to beat that. They've just got to focus on doing as best as they can in this kind of environment. But I think that's all you can hope for. But without massive building, in South Africa, and I mean, I'm talking, big investment in gross fixed investment in infrastructure. How can they perform? And also, the mining industry is still very, very tough. I agree with Ricus. You buy it when it's at the top. Are we at the bottom there? I'm not sure. Not yet. So just a good business, but just don't expect anything from it in this kind of environment.
All right. Gents, let's get into Boxer. Should I buy Boxer shares for 500,000 Rand as a long-term investment? At the moment, it's 68 Rand per share. David?
I wonder whether these people who always say that they're long-term investors, when they genuinely long-term investors, are going to hang around for 5 years. They say they are, but I've never met a long-term investor, because every time the market dips, people panic and got to get out. So I'm not sure they exist. But look, it's a good business, and I think it's well placed in the South African environment. It's catering very much like Capitec is for its particular client base. It understands its customers, and I think that's why I like Boxer. Yeah, it's battled sideways since it was listed. There was a lot of flair when it came on, but you've got to give a company a chance to build some kind of history. Although the history was there, we just never knew it.
Yeah.
So if you had to push me into saying, buy a grocer or buy a retailer, it's probably a kind of business that I would, go for. Not Pick and Pay, but certainly the Boxer side of it.
Okay.
But we need more history. We need to watch what it can do. We haven't had much time to understand it.
All right.
On the face of it, it's in the right area.
So bullish. All right. And on your side, Ricus, if you had 500,000 Rand, would Boxer be an option?
Yeah, let's first talk about 500,000 Rand. If your total asset value of, for you as a person is 600,000 Rand, then I wouldn't put 500,000 Rand in on shares. So So it really depends on how big that amount is of the total wealth of the individual. Um, and leading on from that, depending on what you view as a full percentage holding in a well-diversified portfolio, whether it's a 5% holding or a 10% holding or whatever, I wouldn't have it at full weight. It's a new kid on the block. They've got all the potential to become a reckoned player in the marketplace, but let's face it, they are still up against the likes of ShopRite, etc., etc. So I wouldn't say, well, this is a well-established, well-understood company. So I would tend to take, if I want to invest in it, which I think is not a bad idea. I think there's some great potential in it, but I wouldn't go in with full boots and all into it. I would probably have a sort of a medium weight or a slightly underweight position and just see how it goes. And if it goes well, then I'll increase my holdings. One should never be scared of buying things when the price goes up.
All right. Well, there's a question on life healthcare. Okay, I don't know if you gents have all this info, but when is life healthcare paying a special dividend? I don't have that information, but of course, if you read through their statements somewhere, you'll find it. Um, but I'm just talking about life healthcare, David, paying a special dividend. Would this be enough to entice someone to get into life healthcare?
Well, I think it's already in the price. Once they declared it, it's in the price.
Yeah.
And that comes from the sale of various businesses that they've had offshore. I can't remember them. I'm not going to embarrass myself to try and remember their names. But what's left? There's not much left after the sale of those offshore businesses, which were very good.
What's it?
So
AMG?
you're buying a local hospital group, I think.
Yeah.
Which it's a tough industry, especially with the kind of pressure, with talk around NHI and the pressure that these businesses are finding. I find very little attractive to buy it now. That's not that it's badly run.
Yeah.
I'm criticizing the groups. Is just there's no attraction in it anymore.
Yeah. So what AMG and I think is it Ricus Life Molecular Imaging? I think they still have some sort of. They still have some sort of ties to it. But
I wasn't fast enough with AI. Yeah, I couldn't get my AI typed in there.
Ricus.
So there's.
Yeah.
Sorry.
Any appetite for life healthcare?
I just have to agree with David. I'm not very fond of hospital groups because there's such a lot of regulation and fixed costs and etc. that goes along with owning a hospital basically. So it's not a sector that I find very, very attractive, and although they will still have some benefit after the sale of the overseas business, in effect they will have to depend on their local operations. So I think there's better possibilities in other sectors that are just less exposed to government risk, to put it plainly.
All right. I'm just checking
even
to
APSA,
see.
you see? Yeah.
David?
So even APSA, yeah.
Oh. All right. I'm just trying to see if we should move on to your stock picks or if we still have time for maybe one more question. Oh, I know I have plenty of time. All right. Amplats. Can you please shed light? Okay, this decline was yesterday of Amplat's share price yesterday. The decline in price was not in line with the other PGM stocks. I don't know if there is a reason because these things are so volatile. Today, it actually came out with a production update and the share was actually pretty stable. David?
I don't understand production updates because there are a lot of technical terms that I have absolutely no idea what they mean. But all I looked at is when I saw a lot of brackets around the numbers, just means it's down on the comparative figures, and that's scary enough for me.
Yeah.
Whenever I look at accounts and there are brackets around the numbers, unless it's tax or some expense like interest, then I get nervous. So I think they're battling. Look, they have to put a lot of attention into this. They're going on their own. They are being unbundled. And I don't know what lies ahead for the business, but it's just been a struggle. If you look at a chart, you'll just see the sideways drift for ages. It might be the bottom, but I've been saying that for 3 or 4 years already. So
all right.
I don't know. I've got no appetite for platinum, to be honest.
Okay. Very sexy name that they're going to have very soon.
Ricus said the right. I think this is for trading. These are companies for trading.
Yeah. Very sexy name that they're going to have soon. Valterra is that, I think it's called it's going to be called Valterra when they demerger from Anglo American. Let's go into another one. African Rainbow Minerals. Is it a good buy? Motsepe seems to have about 3 clouds hanging over his head, including the reason our troops were in the Congo, and now a huge tax bill if he moves ARC from Mauritius. Yeah, I don't know about the other reason,
Wrong
but
company.
No. Wrong company. Yeah, there's a
no,
bit of mixed.
No, man. This is
there's African Rainbow Capital and there's African
Rainbow Minerals. Yes.
African Rainbow.
They're asking about African. You know what? They're asking about African Rainbow Minerals, but I think in there they mixed up the issues with ARC. So let's just stick to the minor. Ricus. A good
Which
buy?
doesn't have a tax. Well, it's similar to well, David just spoke about it, and shares for trading, resource counters, and you've got to weigh the one against the other. Anglo's come out with a production update as well, for example. That's not Amplat's, Anglo's, and they were doing, they were very smiley about their iron and copper production updates, which is basically just a function of grade and what you mine and what you've been able to sell. So African Rainbow Minerals, not one that I follow very closely, but I think just because of the spread of their investments geographically, I would hesitate, and as far as I know, that's mainly concentrated in South Africa, and I would rather have my holes in the ground spread across the globe than just in one locale. So if I were going to go for a mining group, I would probably rather look at something like Anglo American or BHP Billiton or Glencore.
Yeah, all right. I think this was a classic case of linking the founder, the actual person, to the company. But anyway, before we get to your stock picks, we have about 3 minutes. Okay, I think let me just go into stock picks. We do have questions that we have not gotten to. Vukile, Blue Label, and Yoko, and Dowling will be back, and Sasol. And Dowling will be back with that show Stock Watch tomorrow live. I think, yes, it is live at 12:30, so you can watch out for all those answers tomorrow. In the meantime, let's get
on a Friday before a long weekend.
Yes. For those people who are serious, we'll be working. So David, your stock pick for today.
Sorry, Zanotti, who are you asking?
Oh, David.
You want mine?
Yeah.
I didn't think about it, but I've got to tell you that I think we've seen the worst in markets. I think we've seen the worst in the US market. And after 3 days of gains and reading Trump at the moment, I'm starting to get a little, picky now and saying, okay, we're reaching the time where you can start to pick up some bargains. I think he's going to retract or backtrack a lot, as we discussed earlier on that. And of course, those overvaluations that we saw in tech companies, I think have adjusted. And I think there's going to be rich pickings there. I want to qualify that saying not yet. Okay. In other words, the lion hasn't been caged yet. He's been tranquilized, but we haven't been able to put him back in the cage. So just wait, because anything can happen. But I think that the signs that I'm seeing are suggesting that, things are turning, that we might have seen the worst.
Okay, all right. And what are you hanging your hat on today, Ricus?
Okay, first of all, huge disclaimer. I know absolutely nothing about cars. The car I drive is 35 years old. Nevertheless, we buy cars. It's more of a it's more of a narrative than anything else. So let me see whether I can quickly summarize it. I'm more negative than David, because I think there's a slowdown in economic growth, specifically the possibility of a recession in America as a result of whatever tariff is going to be fixed on. That will have an effect globally on income for consumers. And it will also have an effect on the cost of stuff because there's supply line problems as a result of tariffs. So you're going to have people with less money having to pay more for stuff, which means that the second-hand market in general is actually doing very well. If you take a look at listed companies in the US which sell second-hand good, if you take a look at listed companies and specifically second-hand car companies in the US, for example, doing pretty well. And I think you'll have the same effect in South Africa. We're not going to get away from what's happening globally. And your new Mercedes is probably going to be more expensive because of parts problems, because of distribution problems. And I think you might actually get an increase in volume in we buy cars. And that's where they make their money. And the graph looks pretty good as well. So just as a narrative and looking at that sector globally, the only real place where you can get exposure to anything secondhand in this country is we buy cars.
Well, I'll say.
And they particularly love cars that are 35 years
Yeah,
old.
I was going to say it's a prime customer.
It's vintage.
Yeah. Well, thank you so much for your time, Jensen. I will have you know that I also got into We Buy Cars, I think it was last week or 2 weeks ago, when they had that huge dip. So thank you very much for that. That's it for tonight's Stock Watch. Thanks to our guest, David Shapiro from Sasfin Securities and Ricus from PSG Hole in One Ruimsig. Up next, the close. Stay watching.